Hey guys, it's Matt Z from the Optimus Studios, and we're going to go today through the multi-time frame indicator, showing its capabilities. But here's the way I want to introduce you to that indicator. I want to address something with you that is a concern to many traders. In Forex, they call it stop loss hunting. People who trade futures, they call it, just stop loss getting triggered. And beginners feel that the exchanges after them, the pros are after them. In Forex trading, there's a lot of talk about, stop losses, again, like I said, being hunted because they know where the stops are. So here's something that I wanted to tell you. I'm here to demystify everything. Think about it this way. If everybody complains that there's, or at least a beginner group, I shouldn't use the word complain, but rather they observe that their stop losses are getting triggered all the time, and then the market goes in that direction, it just tells you something about the nature, the way we apply things. Now, I'm not here to tell you that the markets are, that there aren't professionals out there that can move markets up or down with big quantities, but their goal is not to stop anybody out. Their goal is not to they don't know where your stops are, just like you don't know where their stops are. So essentially, I feel that a lot of beginners, what they do is that they approach the markets every day as if the markets are the same every day. And they put the same stop losses, they put the same targets, and it's just impossible to work that way. So if you want to remove that component of being stopped out all the time, or I should say potentially getting stopped out all the time, the first thing you should do is really look at the volatility of the market. What tools do you have today in your arsenal or in your trading arsenal that would tell you, okay, today is not a good day to put a 2-point stop loss on the E-mini, or today is not a good day to put a stop loss on the Euro USD contract, on the MT4, or on Japanese yen. What do you have that you actually look at to say today is a good day or a bad day for my methodology? So this is what we're going to do with the multi-time frame indicator, and I want to show it to you how it works here. Okay, so the first market that we're going to start with, okay, is the E-mini S&P. Okay, and we're going to look at the daily range. Okay, so we're looking here and it's at 62.85%. What it actually does, it actually looks back at the last 5 trading days, and it tells you that today's range, today's bar on the daily bar is actually 62% of the average of the last 5 days, right? So basically today it's not at its full capacity, right? It is not. So this is your daily range, and this is where you start from. Okay, now I don't want to go into lengthy videos of every single number here, because I'm going to do it in future videos. So we're just going to start from the beginning. Okay, so let's look at the daily range. Now, you could be trading a 5-minute chart. I get it. You could be trading a 30-minute chart, which is fine too. But it's important to look at daily ranges because it tells you on the day what has happened in this day relatively to other days. Clearly today is a narrower day than previous 5 days, and you should, as I mentioned, average to range. And so in this range, if you're used to very tight losses, this is probably a better day for it, right? Today is probably a better day to put something of a tight stop loss. So this is again in the E-mini S&P. Let's look at the crude oil market. Today, the crude oil market, we have the daily range going back 5 days at 85% of the average 5 days. So the last bar, the last daily bar, as it stands right now, and the market is still open, is it's 85.18%. Again, not a very big range relatively to other days. Almost at full capacity, actually, I should say. Almost the same. Let's go to the gold market. Okay, gold market, very interesting. So today the daily range is in the red. It's in 144%. So it looks back at everything else, and today's range, you can see, all right? So on a day like this, okay, you should also adjust when you look at this. You should also consider your profit taking and your stop loss. On a day like this, that it's at 40% relatively more than the last 5 days, what you should do is really make it also a distinction for your profit targets. They could be a little bit higher than your regular day. Again, potentially higher. It's just something to consider because the market is basically has a range which is higher today. Okay, let's go to the next one. All right. The next one is the NASDAQ market. And then in the NASDAQ market, you clearly see that that's the NASDAQ, right, Jake? Yes. Jake is helping me here. There's always help. You always need good help. This is the NASDAQ. Look at the range today. Look at the daily range. Don't look at anything else, okay? I'm going to go into those videos. I promise you, you know, as you go through all the videos in this playlist, you will understand how every single thing works. This is the daily range, and it's at 63% relatively to the other, 5 days that have been there. So again, very narrow range. Even it's sometimes hard to gauge it visually. Sometimes you just don't know relatively to other days exactly what kind of range we have. But clearly looking at the charts, here, you see that it's smaller, but you don't know what it is. Is it half of this? Is it a quarter of the last days? And that's important, okay? Let's go to the next market, because we're going to go right now into the spot FX market. And by the way, this indicator works on MT4 and MT5. Okay, so now we have Euro USD. Clearly today, as the market evolves here, as currently right now, the daily range is at 204%. So double what we had in the last, let me see. Yes, this is clearly the last 5 days. So relatively to the last 5 days, the average true range is at 200. It's double. So let's go back to the discussion of the stop loss for a minute. In a day like this, if you have if you see that in the euro, okay, your stop loss is getting hit all the time. For example, you had a number of consecutive trades, and now you're like, okay, I want to make my money back. I don't recommend to do revenge trading, but let's be honest, that's human nature, and you want to go back to the market and you want to reclaim your losses. In a day like this, where it's 204%, it's not a day that you should actually go back and use the same methodology. Because right now, what you have to do on a day like this is double your profit taking and double your stop losses. Both risk and reward, okay? No point of putting a stop loss in a day like this as it evolves. And as you see right now, we started at 205, right now 204 point something, and now it's at 205. It just grew, and it might grow even bigger. So this is something that you have to take a look at. Let's go to the next one. We're gonna go to the pound. Okay, 134%. So obviously we see 34% higher than the last 5 days. Let's see if this actually changes, and let's give it a second. All right. Okay, due to lack of time, but you will see that if you have this indicator, you will see it. Okay, let's go to the Japanese yen. Huge jump on the Japanese yen. And I know that you don't always have the ability to look at the news and what happened, but if you haven't entered the Japanese yen market, now you realize what we're going through. And clearly, this might even increase, because look at this bar, right? And that's the beauty of sometimes, again, this is not an indicator that tells you when to buy and when to sell. I know a lot of you are looking for those kind of things out there in the marketplace. But if you have a methodology, this will help you substantially, at least in my opinion. Just look at the ranges. You will determine whether it's a good day to trade, not a good day to trade, to take more risk, less risk, or anything of that sort. If your methodology right now works, I don't always want to talk about failing trades. You might have really good trades, right? You might be a good trader, and on a day like this, you're looking and you're saying, you know what? On a day like this, what I can do is potentially increase my risk and increase my reward, and decide if you want to do that. So again, you have to adjust it every day, come with fresh new outlook on the market and something objectively that will give it to you. And a tool that will give it to you, and we hope this one. In the next few videos, we're going to go again into the everything else, all the other tools that it provides, the range, the trends, the CTFs, the HTF, and I'm going to discuss that. But until next time, I wish you well and good luck in your trading. Take care. Bye.